All right, I am Matt. This is Stock Speedrun number 3 for the weekend of April 2nd, 2022. If you're unfamiliar with what a stock speedrun is, as always, you can check this video description for an explanation, a disclaimer as to its content. Let's go and see what we got here. Sierra Bancorp. Bancorp of the Sierras. I don't know if that's what that means. I don't know. Let's find out. Get out of here, Yahoo. No one cares. Okay. Bank holding company for Bank of the Sierra that provides... Oh, you know, I was actually right. I was just joking around. No, Sierra Bancorp is the bank holding company for Bank of the Sierra. Provides retail commercial services to individuals and businesses in California. 35 full-service branches, an online branch, loan production office, agriculture credit center, SBA center. I'm actually not entirely sure what that means. All right, let's see here. These numbers look pretty good. Revenue has a steady climb. Earnings looks like they were stagnant a little bit 2019, 2020. A little bit of a bump up in 2021, so that's pretty good. Quarterly chart is showing me something different, though. Revenues are a little bit flat, and earnings are flat to down. Well, actually, again, these... Sometimes the blue bars, well, even the green bars also aren't really to scale all that well, because look, it basically starts at 10 here. 10, 12, 14, so it goes... So each one of these gaps is 2 million, but this gap down here is 10 million. That's why the difference between, for example, this 11.71 and this 9.62 looks to be huge. It's one entire gap metric thing, when it's actually not all that much. So, okay, let's see. All right, quarter was good. Missed these earnings, and yes, there was a little bit not very good numbers in quarter 4. I want to learn about quarter 4. I want to know what was up with quarter 4 and revenues lag estimates. I want to know why. And actually, there's not many articles about this, is there? The last article is actually about the earnings report. Cash dividend, quarter 4 results. Was quarter 3. Popular among insiders. Let's read that. And let's read undervaluing. Quarter 3, I don't think I got to read about. But I do want to know why quarter 4 was not too great. So let's read into here. Came out quarterly earnings of 63 cents per share, missing the consensus estimate of 66. Compared to earnings of 58 per share a year ago, so still up year over year, but below the estimate. Let's see. A quarter ago, expected that this parent company of Bank of Sierra would post earnings of 64 cents per share. Already produced earnings of 69, so last quarter it surprised to the positive, but this was a surprise to the negative. Last 4 quarters, company surpassed estimates. Blah, blah, blah. Oh, this isn't really much of a summary. No, I want something else. Let's see. I want to read... Wall Street expects growth. Really? This summary didn't have much news. It's just a straight up numbers. Was there not a release? Was there not like a press release that kind of breaks down why it missed? That's surprising and a little worrying, to be honest. It's range. Okay. See, what about these? Look at the Bancorp. Not a large company by global standards. That is correct. In fact, what is the market cap here? 380 million. That kind of makes sense for a small local bank. Institutional ownership. Let's see his breakdown. General public. That's a large portion of the general public that has these shares. Obviously, most is institutions. There's a good amount of insiders also. What is this chart? Past revenue, earnings, free. What's this orange one? Free cash from free cash flow. That's this one. Cash from OP? I don't know what that means. Okay, apparently they don't describe it here. I don't know what that means. Never heard that before. BlackRock is the largest shareholder. Goddamn BlackRock. Buying up all the shit. Insiders own 41 million of the 417 million. Okay, it's a decent number. Investors undervaluing. Its own style score system in an effort to find stocks with specific traits. Currently sporting a Zacks rank of 2 buy as well as a value grade of A. Stock is with a trailing PE of 10.86. That's actually not bad, which compares to the industry's average of 17. Again, it is better than the industry's average. PE's like golf. You want a lower score. Over the past year, forward PE has been as high as 11. That's still, I mean, that's still lower than the average. So it's still pretty good. PB ratio. I'm actually not too sure PB. Wow, you know what? There's a lot of shit I don't know. Why the fuck am I even doing these videos? I don't know jack squat. What is PB? Price to book. Okay, that makes sense. Actually, it's pretty close to 1. Book is 24. Pretty close to 1. That's actually a good sign, in my opinion, I think. Hits a stocks. Oh, you know what? I could have just kept reading and it would have told me what that is, but no, I decided to go off on a tangent, figure out for myself, and add some time to the clock because I'm an idiot. Calm down, calm down, calm down. Find total assets minus total liabilities. Company looks solid when it's compared to its industry average of 2.31. Yes, I would also say that's a pretty good. So, PE looks pretty good. PB also looks pretty good. What about PS? Is calculated as price divided by sales, as opposed to price divided by earnings. PS of 3.03 compared to the industry's average of 3.59. So far, all 3 of these numbers looking pretty good for Sierra Bancorp. However, you can also say that why are all these numbers so low? Is it because people think this isn't really going to go anywhere? Or is it just so happens to be that we have happened to stumble across a good value? I don't know. I'm not too sure yet. PCF, how this company's operating cash flow and can be used to find firms that are undervalued considering their impressive cash outlook. That is, company's price to cash flow is 18.93, and as high as. Wait, why does it say? Oh, I'm sorry. This is the industry average here. This 18.93. Okay. Wow. These sentences are structured because these sentences are structured in a way where they give you the numbers for BSRR, and then they give you the industry's average, and then they go and screw with you and reverse it here. They give you the industry average first, and then they give you the PCF of the company. Okay, well, even still here, it's lower than the average. It's actually about half of the average, a little less than half of the average at times. So these are just a handful of the figures considered in Sierra Bancorp's great value grade. Yes, I would agree with Zach's sentiment here, but I wish that something they may have gone into in this article is explaining why these numbers are so good. Is it just that people just haven't discovered this yet? And it's kind of, an off-the-radar stock? I mean, that's possible. A lot of these smaller banks, tend to fly under the radar. Like this one doesn't even have consistent volume. Sparsely traded throughout the day. That is a huge sign of a very under-the-radar stock. Speaking of chart, what does the chart look like? Only goes... Oh, wait a minute. Oh yeah, April of 2017 is 5 years ago, isn't it? Jesus Christ. I'm fucking old. Okay. So, let's take a look at this max chart. Goes all the way back to 1994. Interesting that they spiked back in 2006. Obviously, 2008, 2009, everything went to hell in a handbasket. Looked pretty good back in 2017, 2018. Most of 2019 also. died in COVID, but came back to its levels there. So basically, it just returned to its pre-COVID levels, and like it's just chilling here. Hasn't really gone anywhere. And the fact that it hasn't gone anywhere, you know, because prior to this quarter where things started to slip a little bit, it seems like a pretty solid company. So I kind of wonder why you don't see a general uptrend here. It makes me worried. Combined with the fact, so there are a few things that worry me here. It's that it seems to be well below where the price should be, considering all the metrics. Despite seemingly good number of returns, it doesn't really have much of an uptrend. Seems to be stagnant. Even like look at this chart, this 5-year chart, right? The only big movement you see here is COVID related. Everything else, pre-COVID and post-COVID, again, depending on what you consider post-COVID, is fairly flat. You know, just a little up and down here and there, but it stays well within a range of, it looks like, 30 to about 24. So that kind of concerns me. Like, why are people not bidding this up if it's such an amazing company, both in the numbers and the earnings returns? And that combined with this most recent quarter where there seems to be no explanation as to why it starts to drop off a little bit, it worries me. Worries me a little bit. It kind of makes me, despite it looking like a good company, it kind of makes me want to back off from giving it a buy. Kind of thinking hold right now. I'm wondering if anything else in here can persuade me. Earnings preview. This has a dividend, right? Yeah, so even if you were to hold it, you would still get some returns over time, so that's not bad. Quarterly, year-to-date earnings. Our replacement 50 million subordinated notes. Breaks the past estimates. We'll pay a larger dividend than last year. Hedge funds are dumping. Are they? Really? Let me read this. Investors should pay attention to decrease in hedge funds recently. It was in 6 hedge funds portfolios at the first end of the quarter. All-time high for this decrease is 10. You talk about that for you, doesn't really matter. My opinion. Let me see what the Peanut Gallery thinks about this one. And I can't think of anything that I want to Google for this. I can't think of anything that I need to know that I can't, or that I want to know that I can't find out just from in Yahoo. Let's see, what's the sentiment here? Nice beat this quarter. Great quarter. 4 years ago. There's not a whole lot of action in here, is there? Again, this is a very under the radar kind of stock. You know, low volume. Kind of numbers that look suspicious. So that kind of makes sense. 11 months ago was the last non-bot communication from Jacob saying Bruce Greenwald, who developed the EPV, earnings power value. What the hell is earnings power value? Earnings power value. I don't know what this is. Technique of relying yourself on making assumptions about the sustainability of current earnings and the cost of capital, but not future growth. Okay. Earnings power value is derived by dividing a company's adjusted earnings by its weighted average cost of capital. Stock valuation method looks at a firm's current cost of capital, ignores some important financial assets such as future growth and competitor assets. I don't know about competitor assets. The fact that it ignores future growth, I kind of wonder what the point in that is, because future growth is the entire driver of stock prices, I would argue. It's what makes prices go higher. Stock market is very forward-looking, right? You may be a shit company now, but if people think you're going to be a shit company later, that price is going to go down, even though you're not a shit company now. If you're a shit company now, but people think you're going to be a good company later, your price will go up, even though you're a shit company now. Adjusted earnings and the whack. Never mind. How to calculate earnings power value starts at or EBIT, earnings for interest and tax. EBIT. Does earnings power value tell you analytical metric used to determine if a company's shares are over or undervalued? I don't really see the use in this. Current performance isn't really what drives prices, in my opinion. It's what's going to happen in the future. I don't really see what point this metric has. All right. Anyway, that's enough railing against earnings power value garbage. Yeah, I mean, I gave my case for hold earlier, and I kind of don't see any reason to change from that. Seems like a solid company, but there are enough things. One being the chart, two being the most recent earnings, three being something else that I forgot. I'm pretty sure there was a third thing, but I don't remember what it was. That kind of make me scared, despite the fact that it seems like a solid company, make me scared to hit this buy button because I honestly don't know if it's going to go up. It might, but I am not totally convinced. Honestly, I think the most likely thing is stagnate, as it has done for the last 5 years, COVID notwithstanding. Not to say that going up is out of the question, and if you were to hold on to it, you would be collecting a dividend. So you know what I think hold is a fair call here. Hold is a fair call for Sierra Bancorp, otherwise known as Bank of the Sierras. I think that's all I got to say about this one, and I will catch you in the next one. I'm doing finger guns right now, but you can't see it, and bye.